Welcome to Short View Trading. This is your morning market hit for Monday, 6th of December. What matters today and this week for traders? Well, what a choppy and volatile week that was. Indeed, it started in the week before on the Friday post-Thanksgiving when the S&P sold off 2.7%. And that dramatic price action continued throughout last week. As you can see with the chart in front of you now, the one-day moves on the S&P 500, pretty dramatic swings both ways, although over the course of the week the S&P was down. Similar in the Nasdaq, as you can see in the one-day moves chart up in front of you now, wild swings to the up and downside, principally to the downside. And if you add it all up and you look at the performance on the week, as you can see the chart of performance, weekly performance in key US indices, pretty much all of them were down on the week, the exception being the Philly Sox, but the mid-caps took a tough week along with the Russell 2000, the same indices basically, the S&P 400 and the Russell 2000, both measuring mid-caps, and markets across the board down in the States. Equally, if you look overseas, the choppiness was evident. You can see the chart in front of you now, the one-day moves in European indices, very choppy, lots of up and down, major swings, high volatility, but actually over the course of the week, the market held in. If you look at the chart, the broad Euro Stoxx index we're putting up in front of you now, it basically tracks sideways, and you can see that in the week-to-date performance of the key European indices. Most of them flat, some of them even up a bit on the week, despite high levels of choppiness and volatility. And markets were gripped by fear last week, whether it's fear of Omicron, the new variant of concern, or it's fear of Powell's tapering comments, or indeed it's fear of a Russian invasion of Ukraine. Fear was gripping markets and causing all sorts of downside in various equity markets and indeed commodity markets across the globe. But of course, markets are forward-looking and fear creates opportunities. And with that, lots of our market timing models are now generating some pretty interesting signals. Take, for example, this volatility model we're putting up in front of you now. This model measures the gap between realized and implied equity market volatility. So the actual traded S&P 500 volatility versus what the VIX is telling you, the VIX being, of course, implied equity volatility deducted and worked out using options pricing. The gap between these two is very wide. In other words, the reality is not matching the fear. And as a result, we've got a buy signal on this model. Equally, other models have got a similar type of message. All of those are published each and every day in our daily rag, which is available to subscribers via the website. Or if you'd like a free trial, simply click on the link below, put in your name and email address, no credit card details required, and we'll send you the daily rag for free for 7 trading sessions. So what are we watching today and this week? Well, there are a number of key themes. Firstly, in the US, there's plenty of good, interesting macro data coming out over the course of this week, culminating on Friday with the key CPI data and Michigan sentiment. CPI is expected to hit its highest since 1982. Consensus is for 6.7% on the headline index. That'll be watched closely, as will the Michigan sentiment data. Ahead of that this week, we've got other bits and pieces out of the States, including JOLTS and consumer credit and productivity, all of which is interesting. Elsewhere across the globe, there's a lot of key data out of China, including inflation, CPI data, and total social financing later on this week. In Germany, we've got the final estimate of CPI on Friday. Over in the UK, we've got some interesting house price data. And then in terms of key events, it's pretty quiet because it's the quiet week of the Fed ahead of the meeting next week. And there's some ECB and Bank of England governors giving speeches. Over above that, and finally, second line central banks monetary policy meetings this week, including Canada, Poland, Australia, and Brazil. So that's it from us. That's your morning market hit for Monday, 6th of December. Thank you for listening. Please do subscribe to these videos on YouTube. Simply search under Short View Trading, click on the subscribe button, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.